how is the portfolio positioned today? And before answering that, and by the way, we believe it's positioned quite well going forward, I think it's worth noting that we added Autodesk last March. It's a wonderful business, successfully transitioning to the cloud. It's number 9 on the sheet below. The point I want to draw out is that other than Autodesk, all of the other businesses were in the portfolio well before the pandemic started. So by owning extremely competitively advantaged businesses with stable balance sheets that can grow earnings at strong double-digit rates, we went into the pandemic, I would argue, very well positioned, and our performance during the pandemic, I believe, would support that statement. And now going forward, we believe that not only are these businesses extremely strong, extremely well positioned to continue to compound earnings at high rates, but they're also benefiting from some secular shifts that have accelerated as a result of the pandemic, but were already in place before the pandemic, and we believe they have significant staying power. So I'll offer a couple examples. E-commerce. More people are at home, more people are shopping on e-commerce, and they're seeing just how easy it is. So Amazon, which we own, but it's not on this page, but Alibaba, the growth engine of China, is going to benefit materially from that. Cloud transitions, going from on-premise to cloud. We're going to benefit that through Azure, which is owned by Microsoft, GCP, also known as Google Cloud Platform, through Alphabet, AWS through Amazon, and then also Alibaba. Also, digital marketing dollars from traditional, like magazines and television commercials and billboards. Those marketing dollars are growing and shifting to digital at a very rapid pace, and we have businesses like Adobe that will benefit significantly from this. And then lastly, I think what we've all experienced is not only was cash and check in decline relative to credit cards like Visa and MasterCard, and also digital applications like PayPal, but the decline that cash and checks were already facing really accelerated as a result of the pandemic. And we believe that this is going to have serious staying power. So we're not tactical, as Damon said. We're not trying to shift rapidly and take advantage of different themes in the market. We're trying to own the best businesses in the world that can compound earnings at healthy rates going forward. But the point on our positioning is that we believe that we have the strongest businesses in the world that are also benefiting from secular shifts that we believe should persist for many years.
Yeah. And if I can just add a little bit to that, that's a really, really important point. So these are secular forces that have been in motion for a long while. The environment in 2020 really just accelerated them. And now we saw a really natural cycle occur. So some of these technology companies benefited through the course of 2020, and other segments of the market were really impaired or left behind, and are now recovering as we get back to quote unquote normal, or grow over what were just really bad results for other businesses. And so we've seen a little bit of a rotation towards cyclical or value-oriented businesses in the past couple of quarters. That seems to be fading a little bit very recently. But I think it's all very natural. It's a natural part of the market cycle. It just all happened very, very quickly, given the speed with which the coronavirus impacted the global economy, and that we cycled through it. So as we look forward from here, even though we would acknowledge that the valuation of global markets is a little bit higher than average, we feel very confident about the positioning of our portfolio, because we've delivered good returns, but it's been delivered what I would like to call the right way. And what I mean by that is supported by fundamentals. We were able to see earnings growth in our global growth portfolio during 2020. So a little bit of multiple expansion, but mainly driven by the long-term fundamentals of these businesses that can't be said for all segments of the market. And then the final point I'd like to say is As we think forward, and you can kind of connect this back to some of the higher growth companies on that growth spectrum, I would apply it to the portfolio in aggregate. It's the same concept, but if you think about a company like an Adobe, and it's trading for roughly 40 times, and I'm just going to say that we expect 25% compound rate of growth in earnings going forward. That might not be the precise outcome, but I'm going to use a nice round number for ease of math, because at a 25% rate, it basically means your earnings double every 3 years. So if we think Adobe's going to grow at that rate for the next 6 years, it's a quadruple in earnings power. Even if the multiple of Adobe was to cut in half, go from 40 to 20, which again, I think that's a very conservative expectation, but just run the math out, that's still a double in earnings power over, sorry, not earnings power, but a double in the value of the business, even with a much compressed multiple over the course of 6 years. That's a double-digit investment return. So that's kind of our mindset and how we think about it in an individual business level. Adobe supports its valuation, and if you look at our portfolio on that basis, we also believe that we're positioned for double-digit returns on a go-forward basis, even given some of the ebullience in the market and certain segments of the market.